up, guys? Welcome back to the channel. So I just want to talk about moving into this next week, what we could potentially see and what I'm seeing that I think could be offering potential dip plays. The first thing I want to bring up is it appears that on Tuesday, we're going to have Biden doing a speech on the COVID measures on Tuesday about Omicron and how it's surging in the United States. So he's going to be doing a speech. I'm trying to find the time so we have an idea. But this could be a potential, anytime that the market has uncertainty, this could be a time where we don't have that nice bullish run because we're not sure what's going to happen. And they're saying that the Omicron variant is reported in 89 countries, according to the World Health Organization. And although, COVID keeps popping up and it's hurting the markets, it potentially can, if you're day trading, be hard to be on the bullish side. So it's something to think about. The second thing that I'm thinking of is you can see here that I think this is big news that could affect the market. Is Manchin, this guy, he's saying no to the Biden's Build Back Better program's social spending plan. And this, apparently because he's the 50th vote, is going to have an impact on whether they can pass this bill or not. Now, I look at it as uncertainty with the Omicron, the virus, with cases building up over the winter, and this guy, Joe Manchin, saying that he can't go home and explain it to the people of West Virginia so he can't vote for it. So he doesn't support it. That's pretty much the main thing. And it just goes on that the Democrats are hoping to pass a Biden's $1.75 trillion social spending plan that was passed through the House last month. So this is a crucial vote that the Democrats need. And I could see this causing some volatility in the market. And that's why I wanted to bring it up. Because things like this, you have Tuesday, you have Biden speaking about Omicron, and then this already came out that he's not going to vote for it. So this is going to cause some volatility, which could work in our favor if we have some cash on the sidelines and get ready to buy the dip. Because time and time again has proven us, just looking at the S&P 500 right here, it has proven buying the dip pays off in the long run. Because if you were to buy these dips and just ride the wave up, it would have paid off for you in the long run. So even if you're nervous, you're not sure where to buy, and you buy the indexes, you get these dips. And right now, looking at here, we're once again at the tippy top, where it was at a high of 473. Right now, we're at what? Let me see where we're at in the last 5 days. So looking at them, they're at 459 now. So it's another retest of a low at 458, when as high as 472. So it's definitely something to think about, that potentially, if it does break down and we start having some volatility with these COVID cases and maybe this Democrats not getting that Build Back Better program funded, that vote, we might see it come down to 450. So it's just something to think about. There are possibilities to make some money, and it might offer opportunities to buy this triple leverage ETF, which I like to day trade when I think the market's going to go south. I buy SQQQ, which is basically betting against the S&P 500. And if the S&P 500 goes down, you're going to make money in this account. And it's pretty much always been lately, in the last month or two, at the $6 mark. It just keeps selling off, and then it goes back up, and you get a nice 50-cent gain. It's happened a few times already. So it's definitely something to think about. I think those are the two things that we need to think about going into the week, and to be prepared and just have an eye out. So if you're holding bags, you have an idea hey, maybe I should be getting out sooner if it looks like that this uncertainty is causing a lot of bearish activity. Because you might start seeing the big dogs like Apple start to sell off, which they finally are. And this is normal. It's healthy. They're taking profits. It went up to 182 all the way from 120. So, you expect that to happen. But if you start to see the big dogs keep selling off, we need to be careful here. And what's interesting, when we bring up this chart right away, the first thing I notice is this. You can see the support line of why it's actually holding up. So I'm trying to bring up this extended line, but it's not working. Hold on, here we go. I'm trying to, how do you rotate it on this? Hold on. We'll just delete it. So when you bring up here the extended line, you could see that it is breaking this support level right here at 170. So it's just something interesting to think about that is trading below that. And I just wanted to bring those up because I feel like going into this market this week could still be very volatile, and we just have to be prepared. And we always want to follow the stop losses because if we get major pullbacks, we want to have money to buy. And that's how we're going to make money. We're going to be able to have money to buy the dips when it comes. And I do like to go to the short side sometimes, but I'm always a long player biased just because over time, that's what makes money the most of the time. But you can definitely make money shorting, but that's a little more advanced and you have to really follow stop loss. But that's definitely something I wanted to bring up because all stocks are pretty much getting killed. Any marijuana stock is sold off. I mean, Tilray's $7.40 again. I'm thinking about buying call options on them because they were at a previous, like, they used to be like, I think $70 or something. They were at this insane price. Yeah, there you go. And they were like $70. I can't believe I used to trade them at $40 a share. And now it's like they're at $7 and I'm still afraid to play them almost. I mean, any company that you see, CEI's sold off. Coca-Cola, I always have shares in them. I always add some gains into them every now and then. I've got like $2,000 into them that I just hold for life, and I just keep adding any gains I get from day trading. But if you look at Zoom, it's died off. I mean, it's 175 now, and I kept calling it at 300, then 200. It's like, when are they going to turn around? But we'll see. A lot of these companies, these growth companies, are just selling off. So you just want to be careful. You know, even if you see the S&P 500 going up, it's like, where's the money coming from? Because a lot of these stocks are getting killed. And then the only companies that are really doing well were Tesla, Amazon, and Google. I don't know how they single-handedly can hold up the market that way, but a lot of stocks have sold off. While the Nasdaq is, and this is the Nasdaq ETF and S&P 500, they've all continued to go up. So let's just follow our stop losses and stay diversified if we can.